Do you have an LLC? If so, then you might be paying significantly more in taxes than you need to. That's right, many LLC owners can actually save heaps of money by switching the tax classification of their business to a different corporate structure. But here's the thing. The end of 2022 is fastly approaching, and this means that the amount of time that you have left in the year to get out of your LLC and switch to a different type of corporation or a different type of structure is quickly running out. So in this video, I'm going to tell you everything you need to know about getting out of your LLC in order to save you money in taxes. This includes why you should do this in the first place, what kind of corporate structure should you switch into, and what is the deadlines in order to make sure that this happens. If you own an LLC, then I'm going to let you know right now, this is absolutely the video you don't want to miss. And I want to make sure you stay all the way to the end because I'll be providing you with one key golden nugget about this entire situation that'll make it 10 times easier for you. Let's dive in. Why should we be getting out of our LLC in the first place to save money on taxes? LLCs are very helpful, right? They limit your liability, they create you a legal business entity structure. However, if you have an LLC, then you'll be paying 15.3% in self-employment taxes for all of the income that you make with your LLC per year. The 15.3% covers Social Security and it covers Medicare taxes. 12.4% goes to Social Security, 2.9% goes to Medicare. LLC owners have to cover the full 15.3%. Now, employed people only have to cover half of this amount, which is 7.65%. And believe it or not, their employer covers the other half, the other 7.65%. So by owning an LLC and being self-employed, you essentially have to pay an additional 7.65% on all your income. So if you have an income of 100 grand, that means you would owe an additional $7,650 in taxes per year. But luckily, there is a way to reduce your Social Security and Medicare tax burden as a business owner. And this, my friends, is by switching from an LLC to an S corporation. So the next thing we got to talk about is what makes this whole thing sexy. Let's talk about the S corporation. So what is an S corp? An S corporation is a business structure that is allowed to pass its income, credits, deductions, losses directly to its shareholders. And this type of business structure is only available to businesses with 100 or fewer shareholders. Like LLCs, S corps are pass-through entities, which means the corporation is not taxed on its profits, and instead the income passes through the corporation to the shareholders, who then pay taxes on it one time. Because S-corps are pass-through entities, it means that you won't have to experience double taxation if you own one or even if you co-own an S-corporation with a partner. But how can we save money by switching over to the S-corp? At this point, you might be wondering this question. Is switching over really going to save me? Well, I'm going to break that down for you right now. When you switch over to an S-corp, you will not have to pay 15.3% taxes on your entire income for the year that you earn through your business like you would have if you stayed as an LLC. Instead, you only have to pay 15.3% on your payroll, or the amount you pay yourself as salary. And the great thing about payroll when you own an S-corp is that you, my friend, get to decide what your salary is. It just has to be considered reasonable based on the IRS's definition of reasonable salary.
That sounds perfectly reasonable.
And that is comparable salaries paid by other companies in your industry or for a similar job in your industry. Now, let's just say, for example, that you generated $100,000 in income for 1 year for your S-corp. If you decided to pay yourself a reasonable salary of $30,000, then you would only have to pay the 15.3% self-employment tax, Social Security and Medicare, on 30 grand instead of 100K. 15.3% on 30K is $4,590, whereas 15.3% on 100 grand is $15,300. Please tell me you see this difference. So we want to make sure that we understand why we would even want to switch over into an S-corp and why this whole self-employment tax is a big conundrum. Self-employment tax can really be a freaking shot to your foot when you're trying to build your business because it's the hidden tax that you didn't know about. That's a lot of money and that's a big difference, guys. That's $10,710 in self-employment taxes that you would have to pay that you shouldn't have had to pay. Let's just stop and think about all these things that you could do with an additional $10,710. It's some sweet tax savings if you ask me. You could take multiple vacations to Hawaii. You could pay off your car. You could buy possibly a Rolex if you think about buying luxuries. You could put the entire amount into your child's college fund. Now, will your business qualify to switch over to an S-corp? This is the next thing we have to solve. You will need to benefit from being in an S corporation prior to the end of the year, or we will have to figure out another strategy in order to switch you over to the S-corp. You will only be able to access the tax benefits if you're able to get your S corporation switched in the year. As mentioned before, only businesses with 100 shareholders or less are eligible to be S-corps. Here are some other criterias though. The corporation needs to be domestic. It cannot be located in another country. Only individuals, certain trusts, and estates can be shareholders, and the corporation can only have one class of stock. Shareholders must be U.S. residents, and keep in mind that certain types of companies are automatically ineligible to be S-corps. For example, insurance companies. We have financial institutions, and domestic international sales corporations are all ineligible to be classified as S-corps according to the IRS rules. So if your business is one of the businesses that are ineligible to be an S corporation election, then unfortunately there is nothing you can do, but we can come up with additional strategies. You will have to have a different corporate structure, such as a C-corp. Now, how do you switch to the S corporation? Now that you know that the criteria for switching is there, now you have to understand, what do I need to do to save the money? The next step is knowing exactly how to switch to an S-corp. If you would like to switch your business over from an LLC to an S-corp, then you're going to need to submit Form 2553 election by a small business corporation to the IRS. All of your shareholders have to sign this document as well. It doesn't matter whether you have 2 shareholders or 99. You have to make sure that every last single shareholder signs this document in order to change over to the S corporation and to get approved by the IRS. Even one missing signature can cause your S election to be rejected, so don't leave anyone out. Now, when is the deadline to file this form? This is critical, guys. It's important because if you miss the deadline, you will need to come up with an additional strategy in order to qualify for the S-corp. The deadline has already passed for 2022, meaning that if you did not already switch your LLC over to an S corporation, then you technically will be taxed as an S corp for the 2022 calendar year, unless you know of another strategy. However, there is still time to change your business to an S corp for the 2022 tax year by filing in late S election 2553 form with a Rev Proc procedure attached to the top of the tax returns. In other words, the vast majority of business owners or CPAs who do not know about this late X election are going to end up paying more taxes than they would have paid if they known that this was possible. And this can all be possible by simply having access to information. You see, one of the things that I pride myself on doing is I pride myself on studying the tax code and then implementing the teachings, studying the tax code and then implementing the teachings. One of those tax codes that I studied is the Rev Proc 20-13, which goes over how to file a late election for someone who needs late election relief. There's could be a number of reasons why you file your S corporation late. Maybe it could be negligence. Maybe you just found this video in the month of October or November and no one told you to switch over into an S corp, and now you found out that you're past the deadline, so you want to be able to switch. The IRS will allow for you to apply for late S election relief. You need to either send in a letter with a Rev Proc procedure attached to the top of your tax returns, or submit a late S election plus a letter to the IRS, and you will get a confirmation letter coming back over to you within about 6 to 12 weeks. The reason why that is a big span is because unfortunately the IRS is behind. They take a lot of time. I don't know what they're doing down there. They're normally backed up. So you can expect to receive that letter within 6 to 12 weeks. Now, how confident am I on this? I have done so many late S elections, it's almost crazy. The reason why I do that is because customers will meet me in the months of October, November, and December in their LLCs, and then they find out they should have been S-corps and should have done payroll. I will submit an S election for them in the months of October, November, December. Sometimes I'll even do an S election on the tax return, even though they didn't S elect in the previous year. And I attach that Rev Proc procedure document that I'm teaching you in order to make sure that I get it pushed through for my clients. I have not had one client be denied for an S election, thank the Lord, and everything has gone well. And I've done thousands of these before with my accounting team over the course of the years that we've had our business. And the reason why this is so important for me, guys, is because the S corporation is the way to save money on your taxes before the end of the year. But you also need to make sure that you take payroll. One of the rules of the S corporation is you have to give yourself a reasonable salary. When we went over that example earlier where I said I made 100 grand and paid myself 30K, I had to pay myself 30K, and it's not just me moving money over. I actually have to process payroll, which means a payroll tax return has to be filed with the IRS, letting the IRS know how much I paid myself in a salary. So my business now receives a tax deduction for the amount of money I paid myself. And just like we talked about earlier, guys, I'm getting tax savings. Why? Because now I'm only paying 15.3% on whatever I chose to pay myself, as opposed to 15.3% of all of the money my LLC might have made. And this is the sauce of being in the S corporation. So let's do a quick recap. We talked about the importance of the S corporation. We talked about the fact that the S corporation saves you on self-employment tax. Self-employment tax doesn't get completely eliminated. Essentially, you're just paying 15.3% on the amount that you paid yourself. The amount that you paid yourself is considered a reasonable salary. The IRS says that you have to give yourself a reasonable salary if you switch over to an S corporation. If you're too late on making the S election, you can do a late S election by still submitting the same form, the 2553 form, with a letter attached to that form. If you get denied, we still have one more option, which is filing your tax return with a late S election plus attaching a Rev Proc Procedure 20-13 to the top of that tax return. So if you're watching this video right now, I want to be able to help you before the end of the year. Many clients are working with my team right now to get their tax plans done so that they know exactly how much they're saving, and we're already starting to plan for 2023. If you're interested in being able to work with me and my team, you know it's late in the year right now. I'm encouraging you to join the Tax-Free Wealth Challenge. You can visit the link below. It's www.thetaxfreewealthchallenge.com. The challenge will be from November 14th through November 18th. And during this time period, I'll be going over advanced tax strategies that you need to get implemented into your tax returns. If you're serious about saving money, you probably have already clicked on the link by now. Now, when you jump into this challenge, I want to make sure you choose VIP. That's going to give you some additional time with me so I can understand your situation. It allows for me to actually put myself in your shoes, and that's something that you might want me to do. Before you jump on this challenge, though, I need to make sure you have some information available. Please show up with your prior 3 years tax returns. Please already know what your 2022 profit and loss statement reads off. You should be able to have all your income up till October of November already calculated for you, so you know how much you've made and how much has gone back out the door. These will be the most important items as you prepare for the Tax-Free Wealth Challenge. I'm so excited to be there with you guys. This is the only way in which you can work with me. I want to make sure I show up for you and give you those strategies you're looking for. So I look forward to seeing you guys on November 14th. If there's nothing else, I just want to say thank you for watching this video and making it this far. I look forward to seeing you on the next one. Cheers.